Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, good morning, good day, good night. For those of you who are new to us, we are the TSTW 24 traders. And our website is www.stochastic-macd.com. Alright, the title of this video is Day Trader using a top-down trading method. Day Trader using a top-down trading method. Let's get started. Alright, I have been talking about how a day trader can use a top-down trading method. I have been talking about a trading drill, looking for a valid trade setup, waiting for a signal, and selecting a low-risk entry point. This video tutorial will demonstrate to traders on a live chart how a day trader can implement a top-down trading method or a multiple time frame trading method. All right. So as a day trader, we are still obliged, so to speak, to use the trading drill or a multiple time frame trading method or a top-down trading method. So when you hear me talking about a trading drill or a top-down trading method or a multiple time frame trading method, is exactly the same thing. All right. We want to see the bigger picture. All right. We want to validate the setup on the higher time frame, and then we want to switch to the signal time frame and then the entry time frame. For traders that are using the TSTW 24 day trading system, we are looking for a setup on any higher time frame, and then we go to the first best time frame. The entry and the signal is taking place on the first best time frame. All right. So I want to trade the US dollar, Japanese yen, currency pair, and I'm on the weekly chart. Okay, so this is a live demonstration. Today is 17. I hope can you see 17 of March 2015 at the time in London is 1 minute past 2 p.m. in London. In New York, 1 minute past 10 a.m. All right. So now, what do I say to traders? What I'm trying to do, I want to sell. Okay. So for this demonstration, we are looking for a bearish signal. What I've already said to traders is that if you want to sell, look for a valid resistance level or look for a support level that has been converted into a resistance. So price D below the support level, retest it on the edge, and find a resistance right there. That's a support level that is converted into a resistance level. Or we can just look for a clear-cut resistance level. I don't want to sell in a support zone unless the support level is converted into a resistance level. So I have a resistance level. I'm on the weekly chart. Though I am a day trader, I can use the yearly chart, monthly chart, weekly chart, 2-hour chart, 4-hour chart to select or to identify a trading setup. I recommend to traders, to get the Nice trade on Amazon. All right, I talked about it already. Very easy, simple. Where I highlighted, various trading setup. I'm going to call out my resistance into red is in a zone of 1 to 178. Though we are trading currency or forex, we can apply the same day trading method. If you are a day trader trading stock, commodity futures, option, or any other financial instrument or indices, you can apply the same method. All right. The resistance we are now at 1 to 178. All right. So a resistance level. So how do I know that it's a resistance level? Why? Because the prior you see was very, very bullish, come to this level, and then come back down. It's a resistance level. So it couldn't go above that red line. So it's a resistance level. Price couldn't display a new lower low, but return back to the same resistance level. The first candle that has closed, which is on the weekly chart, have a shadow on top of it, which means some people try to sell it again. This is the new week, that has started now, all right? So still people want to sell. I want to sell too. So it's a resistance zone, and I see some selling activity taking place. This is my setup. Price at a resistance level, struggling to go above it. It's just, this is my setup, hope you like my setup. I'm going to go now to the 2-hour chart, okay, and see whether I have some bearish pattern, okay. So signal, we want to see a bearish setup, bearish signal, or probably breaking out of a rising channel, retesting it, okay. So I'm on the 2-hour chart now, okay. So from the weekly chart, I go to the 2-hour chart. All right. I will be writing about multiple time frame trading method because the reason is when I start trading fast, I look on YouTube on the web about the multiple time frame trading method, and I see some material, but it looks to me that some of my fellow traders do not want to reveal exactly what is a top-down trading method or a multiple time frame trading method to other traders. All right. But I've been talking about it for some time, and I want to do a quick demonstration here. So on my 2-hour chart, I see a bearish chart pattern. Which one? It's a head and shoulder pattern. Right? This is the highest high, and this is the left-hand side shoulder. This is the right-hand side shoulder. But as I explained to traders, okay, the pattern is not yet completed. All right, but I want to sell. But I know, all right, that the pattern is not completed because the price that did not go below the neckline. So if I'm selling now as a day trader, I must keep my eyes on it. I must control the risk. This is one of the challenge day traders first, because sometimes some traders think that, okay, I'm using a TSCW24. Either the TSCW24 is working or not, it's not my problem. What I will recommend to traders, a day trader is always in charge. In fact, there are two important essential goals for a day trader. What are they? Okay. The first goal for a day trader is to achieve consistent winning trade. So if you want to sabotage a day trader, is to make it lose 5 times in a row. That will affect his or her trading day. A day trader does not like losing trade. A day trader does not like consistent losing trade. So if a day trader is losing many times, so first trade losing trade, second trade losing trade, third trade losing trade, fourth trade losing trade, fifth trade losing trade, he or she is likely to stop. All right? Many professional day traders do not like many losing trade. Because why? They do not have the whole day, they do not have 2 days, they have few hours in the market, so they can afford to take many, okay, losses. So the first goal for a day trader, all right, is about consistent winning trade. I want you to remember this. Very, very important. Consistent winning trade. All right? You want to win more than you are losing. The next essential goal for a day trader, all right, is to minimize losses. So he does not want to lose many times, and he does not want to lose big. If you focus on these two goals, you are likely to become a better day trader. You don't want to lose many times, so if you take, okay, so you want to see your winning rate should be above 50%. All right, maybe you are not there yet. It's not too late. It can take a new day trader up to 4 years to reach maturity. All right. So there are different stages. Don't think that in one day or because you buy the best trading system, you can start trading like the best data. It's a dream, all right? But you want to work on it, okay? Honestly, that's the truth. Work on it. Go through the trial and tribulation. And develop your trading style, learn from your mistake, don't repeat the same mistake. This is how you're going to come up. If anyone else told you something else, they are fooling you, okay? So, you want to minimize your losses. You don't want them to be too big, you want them to be small. So how do you achieve that? You want to use, okay, stop loss, guarantee stop loss. If your broker does not allow you to have a guarantee stop loss, which means if the price hit that level, the trade will be closed, look for a better broker. Now, I know traders use different tools that does not allow them for guarantee stop loss, but as a day trader, I cannot myself place a trade without a guarantee stop loss. I think that would be too stressful for me, all right? It is critical, all right? Now, if you do not, in case you are a broker getting angry with me, so I recommend that maybe you look at it and give, your client that are day trading, a guaranteed stop loss to bail themselves out when the heat is too much, so to speak, all right? So remember the two goals, all right? I don't want you to, so two goals: consistent winning trade and losing small. Guaranteed stop loss will protect your trade. The next thing, the 5% money management rules. So the total amount of your trading account, you will never expose more than 5% of your trading account. I learned this from FSCM, all right? 5% money management rules. It save you a lot of trouble. So anything happen, and all your trade happen to be a losing trade, they will take only 5% of your trading account. Guaranteed stop loss, 5% money management rules. This will help you. Do not overtrade. So you want to make sure your losses are small. So you may use 20 pip. Some traders use less. I hear traders telling me that, George, even 5% stop loss is too much. I don't know how they're doing it. I mean, but these are scalpers, but but some people do that, okay? Okay, so you want to minimize. So you are day trader. You don't want to use 80 pips, all right, for stop loss. That's quite big, though, unless you are a swing trader, okay? So that's why it's so important for a day trader to select a low risk entry point. So in order to control the risk, you want to enter the trade at the best place. You want to find the best setup, and also your entry point should be a low risk entry point, because you don't want to lose big. You don't want to expose your trading account to high risk. So you look at it, though you receive a signal, all right, the setup is not at the right place. The risk is quite high, or the market environment is not suitable. There is a high impact news that is due. What do you need to do? Go and do something else, or play games. Do something else. Keep your money in your bank. Come back another day. You do not have to take every trade. If you don't like it, you do not have to. Because you are feeling bored, or maybe you are addicted to trading, all right, which traders are sometimes very addictive at trading, especially day trading, and you want to trade. Don't control it, okay? So, many winning trade, small losses. Cut the losses, control the risk, okay? Let's move on to, day trading using multiple top-down trading method. So this is my, bearish chart pattern, telling me that there are sellers around here. So bearish patterns will appear around a resistance zone, on or near resistance zone. Bullish pattern, very often when we switch to the signal time frame or entry time frame, we are likely to see, chart pattern that will confirm whether we are at a support level or resistance level. The next thing that I always say to traders is what? The market pattern. So the price at a resistance level, on the 2-hour chart, we see a kind of consolidation taking place here. You see here, blah, blah, blah. It's consolidating here on the 2-hour chart, yes or no? So we are halfway here, but I want to sell, okay? So what I'm going to do, 1 second please, okay? Because I want you to see this. Hopefully you find it useful. If you dislike this video, please put a comment below. So traders sometimes they dislike video and they just walk away. Don't walk away, okay? Write something, okay? If you have a good point, just say it, okay? That will help us to improve our recording. Don't be afraid. All right, so this is oscillating between these two levels. So I have my head and shoulder pattern here. The next thing that we say is the market pattern. The market pattern is a consolidation taking place here. If I draw also a trend line like this, see this trend line, okay, just roughly this point and this point, because you see what I'm trying to do here? I'm trying to see, am I at the right place I can sell? You see, because they drop it down already before, so they drop it here, and if you look carefully, okay, here there is you see here, it's a smaller channel here, okay? So that's why I was I'm trying to see, can I sell now or should I wait? All right. Okay. So on the 2-hour chart we see here, okay, the price is below. I'll color this one now into pink to please the beautiful, gorgeous ladies. Okay, so you see now, so we see now that the pink line also, so we are in a horizontal market pattern, but this trend line here is kaput, and the price start holding it down here. All right, but it's not a very good place to sell. But I want to show you something else. So we go from the weekly chart. I went to the 2-hour chart. Now I'm going to go to the 15-minute chart. And this time, I want to place on my chart the stochastic indicator. This is one of my favorite technical indicator. Traders that know me, I trade stochastic MACD, very powerful trading tool. Going to look for stochastic. The stochastic indicator allows traders to time also the market and also to go into the mind of other traders, because some traders will always, the general majority of traders will sell when the stochastic is overbought. So because the place where I am now is not very, very good, looking at my 2-hour chart, I want to go, so to speak, into the mind of other traders to see what they are thinking of doing. So my stochastic 833, which I prefer to use, is overbought, but when the stochastic is overbought, it's pointing to us a resistance level, doesn't mean sell. Now, the question I need to ask now, I'm on a 15-minute chart, which resistance level the stochastic is pointing to me is this one here. See this point here, when the price changes direction, let's call it now in turquoise. That's the resistance that the stochastic on a 15-minute chart is pointing to me now. So I will acknowledge that resistance level because I'm trying to sell, okay? You know what I mean? All right, people say that in London. All right. So what I'm going to do, I'm going to be a little bit patient now. I'm going to leave this trend line here so you can remember it. I will color it into green. I'll wait for the price if it closes below that green trend line, because there's a small resistance here on the 50-minute chart, which this stochastic 833 on the 50-minute chart is pointing to me. If it closes below my this common trend line, I will try to sell it there. It's a bit risky because I'm on the lower end of my blue channel here. But I want to give it a chance because I look at something else which I don't want to discuss here, which is giving me, okay, who is allow me to take that chance, okay? I use other proprietary trading tool for myself. So on a 50-minute chart, so this is the red resistance that we have drawn on the weekly chart. So you see the red line from the weekly chart is now linked to the 50-minute chart. This is what we call a top-down trading method. So we know that this red line is for the weekly chart, is a key level. So we can see on the weekly chart, we are using a multiple time frame trading method or a top-down trading method, or what I like to call the trading drill, weekly chart, 2-hour chart, 50-minute chart. I may zoom into it. It doesn't mean that we can only use 3 time frame. I may zoom into it again and go to the 3-minute chart, okay? You see now? So on a 3-minute chart, what is happening here? We see a bearish progression, so some people saw it here. On the 3-minute chart, too many drawing on my chart. This will allow you to concentrate more. Have another blue channel here on the 3-minute chart to avoid confusion. I'll color it in turquoise. So what we are doing, we are breaking it down, so to speak, from the weekly chart. We are zooming to it. Is he ready? That's what we are trying to do. Is he ready to? Is he cooked? Is he well done? All right. Do you eat steak? Do you want it rare? Do you want it medium? Do you want it well done? The same thing as a trader. We want to know: is he cooked? Is he ready? All right. All right. It makes sense. So it came out of this orange. So what's the interpretation of this progression? So the dominant force on the 3-minute chart now, they were selling. Now the price is rallying up a bit. Okay, we can go on and on and on and on, but I want you to stay focused because I'm going into the mode of what we call multi-talented trading. Okay, so weekly chart, 2-hour chart, 50-minute chart. That's what we've done. So from the we see a resistance level, we want to sell. We go to the signal time frame. We are looking for signal or bearish chart pattern. The pattern that we have seen on the 2-hour chart is not yet ready. All right, the head and shoulder pattern. Now we went to the 50-minute chart. The stochastic is overbought, pointed towards the resistance level. But my green trend line here, the price went down. Some people were selling on the 3-minute chart. I draw now Fibonacci retracement on my chart. I want to go into the mind of other traders. The price approaching a 50% Fibonacci retracement level, which is corresponding to this resistance zone on the 3-minute chart. Okay, but I will not sell. But you see now, I'm coming down now to the 3-minute chart, but I will not sell. Why I will not sell now? Because the price is in a rising channel. On my entry time frame, I don't want to violate the market pattern. On my signal time frame, I don't want to violate the market pattern. So I'm ready now to sell, but only, repeat, only if the price come out of the green channel. It makes sense? All right, it makes sense. So I will remove my turquoise line, which is the resistance that we have highlighted on the 50-minute chart. I've done my homework now, a top-down trading method, breaking it down from the weekly 2-hour chart and bringing it down to the 50-minute chart. I want to see more, zoom into it, and I went to the 3-minute chart, all right? So once the price come out of this green channel, though I know that on the 2-hour chart we have this blue channel, the market pattern is horizontal. Don't forget, we don't want to fight the market pattern. All right, it's not the best place, so there's a bit of a risk in this trade. There's a resistance here, we have highlighted on the 50-minute chart, but I'm willing to participate in this trade because it's a little bit risky trade, my friend. I will not, okay, expose myself too much, which means I will keep my eyes on it and I will use guaranteed stop loss, but I will keep watching it because it's not the best place. This place, the top of the consolidation on the 2-hour chart, will be a better place for me to look for opportunity to sell. Those who sold it here were at the best place, but I was not looking at this financial instrument at that time, so I missed the opportunity to sell here. So I'm looking for another option. If the market allows me to sell, it doesn't mean that I will definitely sell, but if the opportunity is given to me, I will sell using the top-down trading method. This is about day trader using a top-down, okay, trading method. What I will do now, my friend, I'll pause the video, okay, because I've been talking to you now more than 20 minutes, 22 minutes now. I don't want the video to be too long, all right? Day trader using a top-down trading method. I'll pause the video for the first time, and when it's ready, when it's come out of the channel, a candle on the 3-minute chart close below this channel, I'll come back here and sell it right in front of you and let it run, okay? So pausing the video for the first time, but before I pause the video, I'll put a vertical line here, a turquoise line there, and I will just let it run until, okay, there is an opportunity to sell. If it continues to go up, then I'm not in the trade. I will just let other traders trade it and push it up. I'm not here in this trade. I will be selling only if the price closes below this channel, down and down state. So, pausing the video, the time in London now 22 minutes past 2 p.m. All right, in New York 22 minutes past 10 a.m. on the 17th of March 2015. Okay, pausing the video for the first time. We'll come back to it and talking about okay, day trader using a top-down trading method. In this case, weekly chart, 2-hour chart, 50-minute chart. Okay, breaking it down more to the 3-minute chart. Speak to you soon. Hello traders, I've just sold the dollar yen. As you can see, the price now below the channel and also this trend line here. I sold it at 127, 121, 121, 27, 121, 27 right there. I want to draw a line there where I enter my trade. The price returning inside the channel. That's okay with me because the most important thing for me is that the price did close below the channel. Now it's trying to go back inside. I will sell it now. Okay, as I show you, 127, 12127. Okay, right there, 12127. Okay, that's my entry point. I will color my entry point, which color I'm running out of option now. I use blue, I will use turquoise, okay? I'll move my vertical line, I'll remove my vertical line when we pause the video. So this horizontal turquoise line, that's my entry point. And now I'm going to select, set my stop loss to 7. What is 29, 22. I will use 22 pips for this trade. 22 pips. Placing my stop loss at 1 to 149, right on top of this resistance here on a 3-minute chart. Okay, so this is my stop loss. I'm going to put it there. I'll color it into red, 22 pips. All right. 1 second, please. 1 second, please. 1 second, please. Let's call it 1 to 1. Showing a 4.8, but it's 4.9. Okay, that's my stop loss there at 1 to 149. Okay, so entry point at 1 to 127 using 22 pip, bringing the price at 1 to 149. If the price return back near this level of 1 to 149, because normally I should move my stop loss 5 pips or more, or 10 pips above this resistance level. So if they push it near this level, I will move my stop loss maybe 7 pips, a little bit above the previous resistance level. But as it is now, because I'm going to be watching this trend, I will leave it as it is using 22 pips for this trade. Now, I'm going to go back now to the 15-minute chart, okay, and I want to see where I can grab my profits. To 7 to, no, that's not good. I'm a bit, I want it, in my view, it will drop down more, but we don't know how long it will take before we get paid. So, let's see here, 1, 2, that's too far. And 6, no, I want more than that. 8, 0. Okay, guys, I won't be too greedy here. Should go down more, but should go down more. Should go down more, big time. It should go down more. So when we are selling, we are looking at the next support level, where the price, you see the support level, we can take profit before that, depending on how much profit we are willing to take and how long we want to stay in the trend. So the first target is the first and nearest support level, which is very close, because for the horizontal channel that we have shown you on the 2-hour chart, see here we are selling very close to it, but I want to remain this trade a bit longer, so that's why I want to get paid more, because I take a higher risk. I want to get paid more. All right, you understand? Because I'm risking. My entry point is not very good, so I want to set my stop loss a bit down, so I get paid more. Taking a bigger risk, I want to get a bigger reward. Okay, so you can decide to come out from the trade anytime if you want to. Okay, I will set it at 12080. Okay, 12080. I will set my target there for taking profit. That will give me 47 pips. That's not bad. That's not bad. Sitting in front of the computer. All right. So I'm going to adjust it clearly here. I want it to be at 80, so I'll leave it as it is now. So I'll color it too many colors now. I'll finish with my drawings now, okay, on this chart. So I'll remove the pink line, okay, all right. remember that 12149 is my stop loss here. In fact, because I have another red line here, I'll change that color into orange. Okay, change it to orange right here. My entry at 127. Okay, 12127. That's my entry point. A bit risky trade. I want to give it a chance, expecting okay, 47 pips out of this. Okay, so this is my target level zone. All right, so here it is. I'm already in this trade. Okay, so there's nothing more to do. It's just to manage the trade, and if I don't like what is going on here, I may decide, okay, to bail myself out and go away before it is too late. All right, but so far, I'm happy with everything. All right, expecting, okay, 47 pips out of this trade. Okay, it makes sense? Okay, now that's it. Nothing to say anymore. All done. We have started analyzing the dollar yen on the weekly chart, talking about day trader using a top-down trading method. The price was at a resistance zone, as you can see the red line here on the weekly chart. The stochastic 833 also was overbought, but where the stochastic is overbought is pointing to us, the resistance level. It's not because the price is at a resistance zone that we should sell by all means, but if you receive a signal at a resistance zone to sell, that's the best place to sell. We switch to the 2-hour chart. We have noticed that there is a head and shoulder pattern that has been in place for some weeks now. All right, the pattern is not yet completed. It's a bit risky trade because the bearish pattern is not completed. All right, we zoom into it more. We see that there is a smaller channel here, the blue channel on the 2-hour chart. Then we go from the 2-hour chart to the 15-minute chart. Now, this is not, okay, the standard of top-down trading method. So you can use different time frame. That's the point of a top-down trading method, okay? You don't have to use a weekly 2 hours and 50-minute chart. One can use daily 2 hours, okay, 10-minute chart, okay? All right? But this is one example of a multiple time frame trading method, okay, live trading. So far, okay, that's where we are. My entry is still holding nicely here. So I switch to the 50-minute chart. We see that my stochastic is overbought on the 50-minute chart, pointing to me this resistance here, okay, on the 50-minute chart, okay. But I did not want to enter the trade and violate the market pattern on my entry time frame. This is one of a typical day trading mistake. Traders want to buy, they go to the entry time frame, they go to the first best time frame, and they will violate the market pattern on the first best time frame. It's not, if you receive the signal, do not violate the market pattern. So I waited for the candle on the 3-minute chart, so from the 50-minute chart, I zoom into it because I'm waiting to enter the trade. That's why I choose the 3-minute chart now. I can stay on the 50-minute chart, wait for the 50-minute candle to close, but I want to see clearly as it's happening, so I may sell it, okay, at early stage, okay? All right? But a conservative trader may wait longer. You see here it's still a bit risky, but I draw my channel on the 3-minute chart, and the price came out of it before I start selling it. I'm using for this trade a reasonable stop loss, 22 pips. I would prefer to use a 15 pips, 1.5, but looking at the price structure on the 3-minute chart, it will make more sense to place my stop loss here. If my normal requirement for the stop loss is like a 40 pip or more for this dollar yen, I will not use it because of the characteristic of this financial instrument. If I was trading Apple stock, I may use 50 pip, 50, because it's more volatile. If I'm trading the dollar Swiss franc, which is more volatile, I may use a bigger stop loss. Depending on the characteristic of the financial instrument that I'm taking, I may decide to trade it or not to trade it, or look for another financial instrument that does not give me too much risk. At the end of the day, as I explained to you, two things are essential for a day trader, okay? He or she wants to achieve consistent winning trade, and the second goal is to minimize risk at all costs. I would like to introduce traders to a new web page that we added today. It's here at stochasticmardi.com. If you want to know more about day trading, click on Day Trader, and you will read more to understand what I'm trying to do here. I will also add that video when it's ready to this web page. So go to stokasticmoney.com, click on Day Trader. It's a new page added just now to our website. So what I will do now, I'll go back to here we are. So what I will do, okay, I hope you learn something from it, okay. By the way, if you like this video, okay, give us the thumbs up. Don't walk away. All right. If you're watching it now, you don't log on. You need to log on or log in. All right, before you can okay, rate it. Okay. If you dislike it, okay, mark it down. But I would prefer you write a comment below why you dislike it. All right. And if you truly love it, okay, share it on Google Plus. Okay. Don't be shy to share things. Okay. If I truly like something, I share it. Okay. All right, share it on Facebook or Twitter, whatever, with your friends, so other traders also may learn from it, and so we may have another lead market. So I'm pausing the video now again for the second time. I set my target already at 12080, expecting 47 pip in this trade. All right, I've demonstrated to you how one can use okay, a multiple time frame trading method or a top-down trading method or a trading drill, okay, as a day trader. We'll come back to it now and see whether I'll get paid on this live chart. The time in London now is 18 minutes past 3 p.m. We have started around 2 minutes past 2 p.m. in London. Now it's 18 minutes past 3 p.m. in London on the 7th of March 2015. All right, in New York, it's 18 minutes past 11. All right, so pausing the video for a second time, I place my vertical line here. You can see the time is right here, 11:18, right here, and I will come back to it. But before we go, all right, if you want to subscribe to our website, go to stokasticmoney.com and click on okay, the subscribe button on the home page. Okay, so speak to you soon. We'll be looking at it whether they kick me out or they let me get something out of this messy market. So speak to you soon. Pausing the video for the second time. All right, traders, what's happening here? Just to show you how this trade now is progressing. All right, as you can see, we paused the video here around 18 minutes past 11 a.m. Eastern time. All right, right here, and now you can see that it went down a bit, but it's going back to retest the green trend line. It's very important for day traders, especially if you're a new trader, what we are going through. So you enter the trade, you let it run. Okay, it's up to you. You want to come out now or you want to remain in the trade, all right? But if you have followed the correct procedure, you don't have to worry too much. If it happen to be a losing trade, all right, you don't have to call your mother this time because you have done the right thing. So you just, okay, take it like a man or like a woman, all right, and look for the next, okay, trading opportunity. So far, nothing to worry about, just to show you, okay, what has happened so far. I'll move my vertical line to the point where I'm going to pause it again for the third time, and I'll let it run and to show you what's happening. So you can see we on the 3-minute chart, we don't have enough room for the price to progress. I will change my time frame. Remember, I'm changing my time frame. I'll go to the 10-minute time frame. All right, the vertical line is still here, and it's right there on the 10-minute chart, so we can see more price action. Pausing the video for the third time, and I will speak to you soon. Okay, traders, we pause the video here. I'm going to place my vertical line. You can see it here, all right. And since then, you can see that price went down. We are now on the 10-minute chart, as I did before I paused the video. And I still have my green lines here. And now you just stacking here. The price now 12131. New York just closed now, so I'm just going to leave it like this. Okay, you can have that sometime, but there is a bit of risk in this because I'm going to go through the Asia session. We are talking about the dollar yen, so I will let it run. I leave it here, and hopefully it will be okay, a profitable trade. But I will also pause the video and leave it like this, okay, and we will come back to it and see what has happened. Okay, the most important thing is to apply the multiple time frame trading method. Okay, find the setup, okay, the signal, analyze the price. We are not trading, okay, the indicators, we are trading the price. So we want to, okay, apply the trading drill, but we do not want to violate the market patterns on the setter time frame, on the signal time frame, and also on the entry time frame. As you can see, I waited for the price to come out of this, okay, green channel. I'm aware that this is not the best place because I'm on the lower part of the market pattern, the blue horizontal channel on the 2-hour chart. So I'm a bit careful by my stop loss. I'm happy with my stop loss, 22 pips for this trade. So the risk-reward ratio is quite good, but it's still a bit risky. And also checking the time now. As you can see, it's now 17 minutes past 4. All right, you can imagine. All right. In London, 17 minutes past 4 in New York, okay, Eastern time. And in London, 4 minutes past 9 p.m. We started this video nearly 7 hours ago. So you can see that the price just going blah, 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 blah. And I've paused the video many times, so I will pause it again and we will come back to it. So move my vertical line again to this point. We are now still on the 10-minute chart. Okay, the time in London is 4 minutes past 9 in New York, 4 minutes past 5. We'll see what will happen. Hopefully, in this scenario, we may have to wait until London opens tomorrow, which is exposing this trade to a bit of risk, because if you leave a trade open like this throughout the Asia session until London is open, chances are they will take you out or something like that. But I'm quite happy with my okay, verification, so I'll give it a chance and be patient until I get paid. So pausing the video and we will come back to it when there is something here to show. Speak to you later, okay? All right, traders, what's happening here? Okay, just to show you what's happening, I'll remove my stochastic indicator. We are now on the 10-minute chart. So you can see we paused the video here, and since then the price went up. You can see it went up all the way to 12140. My stop loss is still here intact. All right, so the price now at 12134. It went a little bit horizontal here on the 10-minute chart. So we will leave it. Okay, so it's late in London now. So we come back tomorrow. So what I will do, if you want to leave your trade open and you don't want to monitor it, you can set, okay, a limit order to close the trade instantly as soon as the price hit the target. This is what I'm going to do now because it's late in London and my target is at 12080. I need to change my time frame to show you where it is. Let's see, 50-minute chart. Can we see that? No. I'll go instead to the hourly chart. It's somewhere here. You see the green line here? That's my target. In fact, it's at 12080. Okay. All right. Expecting 47 pips out of this trade. So it's late in London now, so what I will do, I will just let it run and set my limit order here, which means if the price is going down and I'm not here, all right, and the price hit the level of 12080, my trade will be closed straight away and my profit will be banked instantly. All right, this is the beauty of a limit order. You can use a limit order to buy, you can use a limit order to sell, you can also use a limit order to close a trade if you are not monitoring, especially if you are working and at the same time you want to trade, you are not watching the market, you can set a limit order. So when the price reaches okay, the target zone, your trade is closed straight away. All right. Okay, I'll be recording another video about limit order to explain to traders how they can use it. So pausing the video, all right, for the last time, hopefully. All right, go back to the 10-minute chart, and that's where we are posing now. Tomorrow you will not be able to see all this line. I may have to check my time frame before you can see, because they probably move all these hours. Have to change my time frame to 30 minutes. In fact, I will do it now. So tomorrow, I'll go to the 30-minute chart now, so you can see everything that I'm doing here. So I'm now on the 30-minute chart, pausing the video. Okay, I will come back to it, and as soon as the price hit this level, my profit will be back. So speak to you, okay, later. Okay, traders, good morning. The time in London now is 7:41 on the 18th of March 2015. In New York 3:42 a.m. And we entered yesterday this trade around 2 p.m. London time, just before New York is open. And as you can see, it was dragging on, went up, went down, and we let it run through the Asia session. We were trading the dollar yen, all right, talking about day trade route using, okay, a multiple time frame trading method or top-down trading method, all right. We have started from the weekly chart to switch to the 2-hour chart, then 50-minute chart, and then we zoom into it to enter the trade right here on the 3-minute chart, all right. As soon as the price closes below this green channel on a 3-minute chart. But as you can see, I let it run through the night, but I'm still in this trade. You can see this is my stop loss here, and I'm still in this trade, okay. And I'm using 22 pip, as I explained to you yesterday. So in exactly 17 minutes, London will be open today. So I will not change anything from this trade. I will not move my stop loss. I will let it stay like this, and we will see what's going to happen. As I told you, okay, sometimes you do that, but there's a bit of risk in it, because if you let the trend run like this to the Asia session, very often, okay, it end up being a losing trade, all right? So it's better if you, as a day trader, you don't have the whole day to do this kind of exercise, especially if you're using 22 pip. But this time it has worked nicely. I was okay with it, okay, all right? So it's working, because I've checked something else, which I don't want to discuss here on this currency pair. That's why I let it run like this and see what's going to happen. Now London will be open, and then we will see whether it's going to come down or whether I'm going to be taken out of this trade. All right, going to change my time frame again so I can show you my. It's not showing here. Want to show you. This is my target at 12080. All right, so this is the gray line here, and I'm willing to take my profit here. But when you are selling, your first target is the first nearest support. You see the line here should be the first. Apologies to trader, the first and nearest support level, but I'm expecting it to come down more. We will see what's going to happen. Okay, so stay tuned. All right, stay tuned. Okay, so what I will do now, because I would go to the 15-minute chart. All right, waiting for London to open, and what is my vertical line? I'll need it. Okay, move my vertical line to the point where we are pausing the video on the 15-minute chart, and I will come back to it and see what's happening here, and to update everything. Okay, thank you for watching, and I will speak to you very shortly. Pausing the video again, and I will come back to it. Hello traders, has been a long time since we started trading this. We pause, this is the dollar yen on the 50-minute chart. As you can see, we pause the video here, okay, as the time when London is about to open. And it was beautiful. You can see it's going down nicely now on the 50-minute chart, all right? But my target is not yet hit. I want it to go to, okay, 12080 to collect my 47 pips All right. So since yesterday we entered the trade, sometimes you will find yourself in this kind of a situation, which is a bit risky trading. But I manage it carefully. So one aspect of this is how you manage it. I do not want to change my stop loss because it's a risky trade. I don't want to risk too much pip. But if you work beautifully, it's okay. The risk reward ratio is excellent because I'm risking 22 pips, and for 47 gains, that's reasonable. All right. I'm going to change my time frame now to because of the space here. I need to change it to 30 minutes. So what I will do, because I have other things to do, I will let it run, and probably in the evening, all right, if I have time, I will wrap it up to show you what has happened. I'm now on the hour. I will go instead to the 30-minute chart, and before that I will move my vertical line to the point where we are pausing a video. Getting a bit tired about one video. It has been too long, but the purpose of this video is to show traders how to day trade in real time using a multiple time frame trading method or a top-down trading method. All right, so let's pause it again, and I will be resuming this video for the last time, and to show you whether I get paid or not. I have a limit order below, which you cannot see on this 30-minute chart, but I think you can see it. You see, that's my. I'll go instead to the 4-hour chart. You see, this is the 4-hour chart now. Okay, dollar yen. All right, move my line here. Okay, what's going on? Oops. What's going on here? All right, let's leave it here because I don't know why it's going back there. So this is where we are pausing a video. So we'll come back to it. That's my target here on the 4-hour chart. So we'll see. Normally it should come to this level, okay? Because there's something else I'm checking. So that's why I leave it around like this, okay? So I will speak to you later, and thank you for watching. And we will wrap it up when I come back to see whether I get paid or not. But I have a limit order here. Even if I'm not here, it's hit it, okay? The order will be filled. The time in London now is 45 minutes past 10 a.m. In New York, all right, it's 6:45. I would prefer that we get paid before New York is open to avoid all the other blah, 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 okay? So speak to you soon now. Okay, traders, let's wrap it up. Finally, we get paid right here. You can see that the price crashed through my target point right here and went all the way down to this level at 119.31. See, since yesterday we entered this trade. All right, the dollar yen. Okay, and we let it run through the Asia session. And we were very, very patient. And here, our target was hit here, the green line here at 12080. That was our target, collecting 47 pip, and the price continued to go down more. This was a successful trade. As I explained to you, I was using my own trading tool, and I detected that the dollar yen is likely to go down, but it took too long before we get paid. But as you can see, my stop loss was not touched, and the price continued to go down, and it was a nice, beautiful trade. If you go to the 30-minute chart, you see that's where we paused the video today. All right, right here, and where I placed the vertical line is you can see. The price just slowly but gradually was coming down, and we were pausing the video on the 4-hour chart. So in fact, this line here should be somewhere here on the 30-minute chart because we were pausing on the 4-hour chart. So this line normally should be somewhere in this section here, and slowly but gradually you can see that the price crashed through it. You can see after this candle here, the price retested our exit target, okay, the target at 12080, and after this candle here, this is another opportunity to sell. You can see that the price breaks below the gray line, retested it, and after this candle is closed bearish, it's confirming to us that this gray line is now a resistance level. One can continue to sell and for the price, and then you can get pay more. Okay, right here you see break below, retest, turn around. After this candle is closed, one can look for opportunity to sell using a top-down trading method. So for a 30-minute chart, you may switch to the 5-minute chart or 30-minute chart to continue to sell because the price break below it, retest it, and close bearishly on the 30-minute charts. This is telling us that the bear are still in charge, so we will continue to sell up to this point here. But this was a successful sale, trade. It has been a long trade, and the reason why we let it run is to allow traders, day traders, to see how one can day trade using a top-down trading method. This is the end of the video about a day trader using a top-down trading method. We were trading the dollar yen. We have recognized, as I show you on the weekly chart, okay, we have seen, okay, this resistance here, the red line here, all right, was a resistance zone, because if we want to sell our resistance zone. This is the setup price at the resistance zone. This is the setup. And then we switch to the 2-hour chart. We have noticed, okay, this you see now it's ready here. You see the head and shoulder part. This head and shoulder pattern is now ready because the price breaks below the neckline. The next thing that we can do here, we can expect is the price start going back up, is to come back here and to retest, okay, the necklines. And if you find a resistance on the edge of the neckline, we will expect it to continue to go down. As always, we will apply the top-down trading method. If you retest the support level here, that will be a setup. We will switch to, okay, 5 minutes or 3 minutes, our entry time frame, any time frame that you want to use. And then from there, we'll take it from there and sell it again, all right? It doesn't mean that the price will continue to go down by all means, but if you find a resistance here and start going in a declining channel, that will be another, okay, selling opportunity for us. I hope you have learned something for this video and we'll put it into use, okay, to make an excellent day trading decision. We are the TSTW24 traders talking about a day trader using a top-down trading method. A top-down trading method is also a multiple time frame trading method, which I like to call the trading drill. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders. Speak to you soon.